going to look at different things that are happening. What happens, and this is a very important part of accounting, in that some of you may get jobs as purchasing agents, which is an accounting job, basically. What happens is, out there in sales, they're selling stuff, right? Selling, and they're saying, we're going to need some things bought because we're running out of things, right? Then we're sending you a requisition. We want you to purchase some more of this stuff. So, sales issues a requisition. The requisition is not signed. It's a piece of paper. There is a paper trail throughout the company showing what we're buying, who's authorizing it, and how the material gets ordered and paid for and brought into our warehouse to sell. So, sales department says we need it. Purchasing department finds the best vendor, purchases the merchandise, be sure that it's in the warehouse. Once it's ordered, out there in the receiving department, whoever's out there receiving stuff coming in from these shipments, yes, FedEx, whatever.
Just a minute, go ahead.
Has a job of checking it very carefully on what we ordered, right? And they have a piece of paper they fill out saying, yes, we got it. They also have a copy of this purchase order. Everybody gets a copy of it. Receiving gets a copy of it out there in the warehouse. They're going to match it up to what comes, check it off, be sure we got what we asked for. And the accounting department also has a copy, and they're going to get the invoice from those people. So the accounting department has to have a copy of the purchase order, probably a copy of the requisition purchase order, receiving report to show that we got it before they pay the invoice. And they're going to match it all up. They're going to check it to be sure they charged us correctly, and then pay the invoice. That's the procedure for getting something ordered in a company. It's a very important procedure in that this is the purchase, this is an invoice. We're buying some sporting goods from Langston Sporting Goods Company. And so we're sending them, and then we're purchasing, what did we purchase? 10 sweatsuits or whatever, freight and total. Since we're the manufacturer, we're buying from a wholesaler, we don't pay tax. Okay. So we're going to look at what we bought. They sent us this, their invoice sent to us, because we're the people that did the purchasing, right? So, in our books, as the purchaser, this is a purchase invoice, right? On their books, as the seller, it is a sales invoice. They're the seller, we're the purchaser. Okay. All right, so purchases account is the account where we keep up with everything that we purchase throughout the month that we're going to sell. So we start out there in the warehouse, we have a inventory, right? Back there, in our case, whatever it is, sporting goods, blah, 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 shoes, clothes, whatever we sell. And it's in our warehouse, and we start at the beginning of the month with knowing how much is out there. Now, during the month, as we purchase more merchandise to sell, we do not put it in the inventory account. We put it in what we call the purchases account. The purchases account is keeping up with what we buy this month, during this month, to resell. It's inventory, but we're keeping up with it this month. Then we're going to put it into inventory at the end of the month. Okay. But for right now, we start with our beginning inventory. Make sense? What's already out there. We're purchasing more things to sell, which things we purchase plus what's already out there gives us all the stuff we could have sold. Right? What we already had plus what we purchased. We can sell all that stuff. Alright. So we're just using the purchases account as sort of like a temporary account to keep up with what we're purchasing this month to resell. Alright. Our major account we want this cost as low as possible. Whatever we have to buy it for, plus the cost it costs us to get it here, that gives us the amount of the total accounts payable that we have to pay to our vendor. Does somebody have a question?
I was just going to say, if we keep track of the freight in, it also gives us some indication of if we're shopping for freight carriers. You know,
Exactly.
then you kind of compare.
Yes, exactly. Exactly. You want to get the best deal because that's the cost to us, isn't it? That's the cost to us as far as, of course, we're going to pass it on, but we still want to get it as cheap as possible. So we do shop. We shop around.
My husband was a truck driver for a lot of years, and I know that some of the different companies he worked for, I mean, they bid for the freight all the time. They were constantly bidding for the freight, so they too were trying to get the best deal for themselves. And of course, the people shipping it were trying to get the best deal for the shipping.
Exactly. Well, you see lots of advertisements on TV. Aren't they pretty competitive? You see UPS advertising on TV and FedEx and, you know, and they try to get your business. They'll offer you deals. If you go 100% with all your shipping from one company, they'll cut you some deals, right? Lower the price. So yes, definitely can be a big part of your cost. Okay. So when we do a purchase, we're going to debit purchases, which is the cost of the material, debit our freight in, and then the credit to accounts payable would be the combine the two, and that's what we have to pay that vendor. All right? Okay. Again, this is only pointing out the fact of how nice it is to have special journals and not having to make 12 different postings, 12 different entries, when you can use one journal and do it on one line and post at the end of the month. So that's all this is. I'm not going to go into that again. The same explanation as we used on the sales journal. The same reasoning for having it. And on our purchases journal, so we're going to show on our purchases journal, we'll have whatever columns we feel like we need. We're going to do our date. Who did we buy it from? Right. I would call this vendor name, actually, because we're buying from them, but okay, invoice numbers of when they, you know, the purchasing journal, we do the same thing. We put up the total of our debit column, which would be our purchases and our freight column added together. So your two debits should equal your accounts payable credit column. So just always remember when you're approving that journal, you've got to be sure your totals in your debit columns equals the total that you show in your credit column. Alright, that's just to be sure we didn't do some number, transpositions or anything. Okay, posting to the general ledger and to the general ledger.
Lost the miss last Wednesday.
Okay, purchases journal. Locate the accounts payable ledger account, right? Enter the date, enter the posting reference, enter the accounts payable credit column from your journal, enter it into the balance credit column of your general ledger account, and then go back and enter. So same posting process that you just did when you posted to your purchases journal, your sales journal. So let's look at it. So we take our purchases journal, end of the month, purchases journal, page 1. There's the amount that's got to go in accounts payable. Accounts payable total amount. That's the total amount we have to pay. That's the total amount that we posted to all of our accounts. Shows our total amount. Yeah, I know. This is new. I have not. This is the first time I've used these slides. This is a new book. They didn't have anybody in our business department doing this, did they? And a bunch of, I don't guess. Okay, or they never looked at it again. So anyway, we post the total, right? Freight in, we do the same thing. We go to our freight in debit column. It goes into our freight in general ledger account, the total. Put the number in, right? So you're posting your totals to your same way you did in the other journal. You just post them to your total. Advantages. You can divide your work, and this is done quite often. Strengthens your audit trail to have one person handling all your accounts. And that can be a very big part. Accounts payable is a big part of usually most companies that deal with credit. They'll have one person handling all the accounts payable. You got people calling in all the time asking, why didn't you pay your account? We didn't get your check. You've got to handle when you decide to, when you set them up for payment. Usually the computer will key you on that, but if not, you've got your list. You look when things are due. You've got to set them up for payment. Be sure you're paying when they're due. All right. Keeps everything in one place. All right. Let's go ahead and look at these because it's